Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you today for our weekly wrap-up. Graham, what can you tell us about what's been going on in the market this past week?
Yeah, thank you, Stacy, and thanks for our listeners being on the call. I was actually out of town last week with my family on vacation, but still lent an ear and an eye on what was going on. We really saw the small cap stocks really outperform in an otherwise pretty muted week. I think the investors, for the most part, were waiting for the Federal Reserve meeting that's this week, or at least commentary and some economic reports. So I think a bit muted from that standpoint. So small caps were really the leader last week. If we look at the Russell Index, it rose about 2%. We saw banks really recover, those regional bank area, which is makes up a pretty good weighting of the Russell 2000. NASDAQ, the S&P, lost about 0.5% last week. So we saw 9 of the 11 S&P sectors finish positive. And that was led by consumer discretionary. Tesla surged about 14% on General Motors, adding the EV charging to their network, which was after Ford. We saw crude oil prices fall about 2%, despite Saudi Arabia's unexpected announcement that they were going to do a production cut of about 1 million barrels per day. We did see yields rise. So U.S. Treasury yields rose modestly after central banks in Australia and Canada surprised with a 25 basis rate hike. Just persistent inflation. If we look at the U.S. service PMIs, they slipped a good bit to about 50.3 in May, well below forecast. We did see some U.S. manufacturing continue to buckle under. Maybe the weight of those higher interest rates, factory orders also cooled a bit. And the trade deficit widened in April as U.S. exports fell by the most in 3 years, which could be a drag on Q2 gross domestic product, meaning the growth of the United States economy. We did see weekly unemployment claims jump a good bit to 261,000, and we did see the consumer using credit that expanded 5.7% year over year in April. If we look overseas, Stacy, we saw, basically some downward revisions over the past 2 quarters of gross domestic product, pushed the Eurozone. So we saw some revisions on their GDP, and it pushed the Eurozone into a technical recession. Weak industrial production and factory orders, I think, are to blame, especially in Germany. EU PMI fell for the 7th straight month on declining energy prices, but food and energy and durable goods, they remained relatively stubbornly high. We go over to China. We're seeing a country still struggling a bit to come back online. So the nation's largest bank cut interest rates. We thought that might happen to maybe spur some borrowing. We also were given a clue that China's exports plunged about 7.5% year over year in May, sparking, again, some growth concerns. Again, helping with that interest rate cut, hopefully spur on some demand.
Okay. Well, Graham, what do you think that the Fed is going to do?
Isn't that a $1 million question?
Isn't it?
Right? Well, we don't know exactly, but we'd like to hope that inflation is getting tamed. It certainly is coming down. I think we got inflation about 5%. Core is about 5.6%. I know some of the inflation numbers that the Fed spends a lot of time, or where they put a lot of weight in, are actually under 5. So maybe this is the time to wait and see, since we a couple months ago went through some of the unfortunate situation with some of the regional banks. And raising interest rate is going to put more pressure on them, so on and so forth. So maybe they pause, and maybe we see. I don't know if it's really going to be a pivot. We're not necessarily in the camp that they're going to start lowering rates right now. I don't know that we want to wish for that, because that might be the economic outlook would be a lot worse. But maybe they pause or increase a little and then see, right? So if they pause, they can always come back.
Well, what do you think the likelihood is that the market will continue to be so strong?
I don't think the likelihood is super strong that it's going to continue to be as strong, right? So I think any times that you have market outperformance in certain areas, like we mentioned before, that proverbial ship gets pretty heavy on one side, if everyone knows where I'm going at. So sooner or later, you're going to have a broadening out, right, for a market to be efficient. But it's not uncommon to have a concentration. This one was a reversion to the mean with tech stocks, so maybe with good earnings, strong balance sheets, cash positions, and then you throw AI on top of that. Wow, that's a recipe for a big time rally, which we got. I would not be surprised that we get a pause, right? That maybe refreshes, brings down things a little bit, gets maybe the market broadens out a little bit. I think that would be the healthiest way for us to continue to move forward. But we'll have to see if that works out that way.
All right. Well,
Right.
thank you so much, Graham. And thank you for everyone who joined us today. I do want to say this is a big week here for us. We have our fun event on Saturday. It's our fourth annual car show, and we have already a number of vehicles who have RSVP'd to join us. So please make plans to come on Saturday. We'll be here from 10 to 1, and we're going to have food and refreshments. We'll have a lot of fun. Everybody's going to be here looking at all the cool cars and catching up. So we'd love to have you here too. And if you have any questions, feel free to give us a call here at the office and we'll be able to provide all the answers. Thank you for joining us today for the weekly wrap up. We will see you again next week. And until then, have a great week.
Take care.
Okay. All right.